I'm here filming today at one of Balmoral Quay's absolute waterfront townhouses, 26 Lady Nelson Drive, Rippleside, for sale with Jim Cross. I've invited Brett Bell, the Director of Bell Group Accounting and Bell Group Finance, to discuss how you can maximise your returns this tax time. Welcome, Brett.
Thanks, Donna. Lovely to be here today.
What are the tax implications of selling a property?
Well, Donna, the main implication is capital gains tax on the sale of an investment property. But we do have strategies to minimise that, such as adding contributions into superannuation, but it is important for every investor to speak to their accountant and tax agent to find out whether that is suitable for them.
What are some of the benefits and implications of using taxed depreciation for your property?
Well, Donna, depreciation is a fantastic way to save tax for an investment property. It's vital that all investors obtain tax depreciation reports. The other implication, however, is that on sale of the property, you will pay some capital gains tax back on the depreciation that you've claimed. And Donna, there's a big difference between a brand new property and an existing investment property when it comes to depreciation. Brand new properties are able to obtain big tax benefits for the fixtures and fittings that are in the properties versus existing investment properties that can only claim depreciation on the actual four walls of the building.
What tax deductions are available for property investors this year?
Well, there's actually about 23 different deductions that are available for property investors. So it's just really important that all investors keep receipts of any money at all that they spend on their investment property, whether it's council rates, interest on the loan, repairs and maintenance, and any other expense that they might incur.
Do you have any commentary on structures available for property investors?
Well, the main structures that people use are property investment trusts. They were very popular for a long time, but with some penalty land tax rates now, they're not quite as useful as they used to be. Another one is a self-managed super fund. They can be quite good, especially for commercial investment properties. But generally speaking, the mum and dad ownership of investment properties works really well. But again, everyone should speak to their accountant and tax agent to find out the most suitable structure for them.
Are there any state taxes that investors should be aware of?
Yes, well at the moment we do have some state taxes in Victoria, the penalty land tax rates for trusts and also now just penalty land tax rates for mum and dad investors as well. It's the COVID debt recovery tax that the state government has implemented in Victoria, so that is one to watch out for.
What deductions can they deduct immediately versus those that need to be capitalised?
Think about a fence. If you replaced 90% of the fence, you can claim all of that expense on your tax in that year. If you replace 100% of the fence, you have to claim that as depreciation over a number of years. So if you are going to have a big repair expense or replacement expense, try and replace just part of it, not quite all of it, and you can claim that on the tax immediately.
Thanks for joining us today, Brett, and thank you for all of those wonderful insights to help out investors this tax time.
Oh, it's my pleasure, Donna. Thanks for having me along.
Our talented team achieved great results for our clients throughout May, with 53 properties leased, 2,957 rental inquiries, 423 inspections and 576 applications received. 36A Porter Avenue leased for $730 per week in just 19 days, whilst being perfectly positioned in the heart of Highton, close to sought-after schools, local restaurants and cafes, and all the local amenities you would require. 37 Newell Street leased for $650 per week. Just moments from the delights of cosmopolitan Packington Street is this charming cottage offering comfortable living in a premier position in the desired location of Geelong West. 45 to 51 Homestead Avenue leased for $780 per week. This splendid residence in Wallington boasts numerous amenities for a lifestyle of comfort and refinement. This well thought out family abode, nestled on approximately 3 acres, epitomises expansive living in a serene setting. I'd like to take this opportunity to welcome the Armstrong Creek sales and property management team to the McGrath family. If you'd like further advice on how to maximise your returns this tax time, please call Brett Bell. For all your other investor needs, please give me a call. I'd love you to experience the McGrath difference.